Hello, what's up guys? This is Alex from MarketWise Asia. Good to see every one of you here. If you guys can hear me loud and clear, please say a hi to me in the comments. So today is a Friday. So today is the 18th of June 2021. It's good to see every one of you here. Okay, so let me check the comments right now. Hello, Aman Han. Hello, Gary. Hello, Han Hok. Hello, Gabriel. Hello, MH. Hello, Edmund, Christopher, Danny. Good to see you. CK, Maurice, Swatha, Jazz, Vico. Good to see you. Boon Sing, Florence. Can you guys hear me loud and clear? If you can, please type a yes in the comment. Yes, I hope so. So right now we have about 107 people in the room right now. So I believe there might be some new people who is the first time joining MarketWise Asia Facebook Live, or specifically is a late night talk with Alex over here. If you are the first time joining us on this Facebook Live, right? Please, can you please say hi or please type me in the comments so that I know this is the first time you are joining me on this Facebook Live. So if it's the first time, please type me in the comments. Okay, is it first time? Hello, Yat Ming. Hello, Chua. So how have you guys been? So I think from Monday onwards, right? So we can dine in with two people, with two person, all right, at restaurant or hawker center. So I think there are many of you who has been dying to go out to have some meal or some quiet peace time to just have a proper meal, right? How many of you are actually waiting to have your meal outside? Okay, even though it can be just two person. Okay. All right. Oh, so yeah, there are quite a number of you guys. Hello, Anne. You are from YouTube. Good to see you here. All right. Nicholas, Lely, good to see you. So whenever I go through some of the things today, right, there are certain terms or some of the charts you might not be able to understand, I believe so, but it is okay. Try to follow me as you attend more of my Facebook Live. You will understand more and more. And of course, along the way, I will also explain some of these terms. And if you are already very seasoned with me, try to bear with me for a while. Okay, so before I get really started, right? Okay, so just a quick disclaimer first. Okay, Gary always said that I always say the same thing. Okay, so I have to say the same thing. So whatever I share today is just for educational purpose. It is, not financial advice. It is not meant to tell you what to buy or sell. So Alex is always wrong. Please don't copy me. Okay, get it? All right. So also before I kickstart this event, first thing first. All right, we have this Market Insights Virtual Summit over here. Okay, Market Insights Virtual Summit over here. So it is going to be held on the July 10 and 11. There will be quite a number of keynote speakers. There will be Michael Covell, the best-selling author of Trend Following, Tom Basso, one of the original market wizards and also a hedge fund manager, and also Boris Slotsville, FX expert over here. And there are also a number of new speakers over here. Okay, so do register for this event. So I think this summit comes at the right time. The market is getting a bit volatile recently, so it is a good time to learn their strategies, their market outlook, and also so-called their views on the market. Okay, so do register for this event. All right, it is free. Okay, let me share the link in the comments. How many of you actually registered for this event already? All right, if you already registered, type MIVS in the comments. All right, MIVS, Market Insights Virtual Summit. All right, so once again, this is totally free, proudly sponsored by IG. So do register for this event. There'll be lots of good content and speakers on the 10th and 11th of July. Hello, Ethan. Hello, Xianglun. Okay, so let me go through again what I'm going to talk to today again. So basically, I'm going to share with you, the indices, the market breadth, and I also go through the some of the sectors, the key sectors, like the financial, the health, tech, and also going through some of the broad commodities outlook, gold, silver, copper, dollar index, bonds, and I also go through this thing called the SPHB and SPLV. Okay, I think some of you might not know. This is something new to me also. I get this idea online from Twitter, so I think this is something, I think, good stuff. So I'm going to try to share with you to give you some different perspective about the market. All right. So again, right now we have about 170 people in the room right now, but I only have about 30 likes only. So please give me a like or share if you haven't done so. All right, liking is free, doesn't cost you money. And like Gary always say, okay, I always repeat the same thing. Yes, okay. So if you give me a like or share, it is also telling Facebook that you enjoy my content and want to see more of me in the future on your Facebook feed. Because if you don't do that, Facebook will deem that you don't like me, you don't like MarketWise Asia, or you don't like my content. And eventually, Facebook will not show you MarketWise Asia Facebook feed on your feed already. So please give me a like and share. All right. Along the way, if you think that it's good content for you, get good value, please like and share. Okay, can all right. So yeah. So I'll go to that. I also share with you the watch list that I'm looking at the market right now. Okay, so let's kickstart this event right now without holding you back further. So I'm very sure many of you should know on Wednesday. I think on Wednesday, the Federal Reserve forecast that there will be at least 2 rate hikes by the end of 2023. I think some of you might have already watched my YouTube video that I published on MarketWise Asia Facebook page and also on the Telegram channel already. So this is just a recap. So the market actually doesn't really like the news, and the market actually have quite a bit of selling for the past 2 days already. Okay, so actually, if you think about it, 2023, it is still quite far away. So the market, I think, tends to a bit of overreacting now. But nevertheless, the news, the mainstream media will always find a reason to explain why the market is coming down. But I've always mentioned a number of Facebook Live, the market is at a high, so it is not surprising if the market decided to do a steeper pullback, correction, or retracement, whatever you call it. All right, so let's take a look at what is the current state of the market right now. So this time now I changed to Bloomberg. Okay, I changed to Bloomberg. Right, so the Dow Jones is down, the worst of all the 3 indices is down about 1.2%. All right, the S&P is down 1.1%, and the Nasdaq Composite is down 0.85%. So overall, the market is down. Okay, so let's go to the chart right now. All right, so let's go to the S&P futures, or S&P futures, S&P 500 futures. All right, for those who are new to me, I tend to use the S&P 500 futures. All right, the reason is hold on, let me try to do this. The reason is because it tends to give me the volume, and also it tells me what is happening during the Asian hours and the Europe hours also. Okay, so all right. So at first glance, right, I know there are a number of you who are new to MarketWise Asia over here. So just do a very quick recap on the cloud, the central pivot range, and such. Okay, so let me go. Let me try to go into candles, right? Since most of you are familiar with candles. At this point in time, right, it is an uptrend or downtrend. I think for those who are already following me, you should know, right? I use this thing called the Ichimoku cloud to tell me the trend. So for those who are new over here, right, ignore these lines over here. These are my trend lines. Okay, so let me try to remove. Okay, hard drawing first. All right, so you can see over here, right? Price is below the cloud over here. It is a downtrend. Price is above the cloud over here. It is on a uptrend. So right now, price it is still firmly above the cloud. So it is still an uptrend. So don't be scared. Okay, don't be scared. It is still overall in an uptrend. And if I add in my all my indicators, my central pivot range and such, and the pivot points, you can see that, okay, for those who are new over here, the green line over here are the central pivot range, what I call the CPR. It be acting as a support or resistance zone, and this central pivot range is derived from the pivot points. Okay, so the pivot points, you can see over here, these are the lines over here, like the pivot is the P, R1, R2, S1, S2, but I'm not too sure why for this month, right, TradingView doesn't really show the line extended. So it can be look a bit strange. For example, if I look at the spot index, it will draw the lines over here. Can you see over here? So just to show you, I'll use the XPX, the cash index. So right now our market has been down for 3 days already. So down is down 0.95%. But right now price is at the central pivot range. So it is still at the support right now. All right. So for the Nasdaq 100, okay, it is still high. For the past 2 days, actually, in fact, the tech companies, the growth, so-called the growth company, in fact, rarely, right? It is the S&P and the Dow Jones, the more of the traditional company, the financial company, the banks that are coming down. So right now, Nasdaq is the strongest among the three. So can you see over here, when price is at the central pivot range, at below the CPR price, act as a resistance and then came back down. And once it broke above the CPR, it come and test again, it be acting as a support over here in this region and then heading higher. So right now, we also kind of stuck at this R1 level. All right, so this is how the movement is right now. And then for the Dow Jones, I think it's the worst. Okay, Dow Jones, can you see over here, price is acting as support in the previous CPR over here. But this time around, this month in the month of June, price has actually broken below the CPR, the central pivot range already. So this tells me that the uptrend, it is weakening. But again, I'm not saying that it is going to crash. I'm just saying that the uptrend is weakening. It is still above the cloud. Can you see? It is still above the cloud. Okay, price need to be below the cloud over here. Then I will deem it as a downtrend on the daily time frame. So a recap over here, right? If you go into like weekly time frame, all right, all the indices, it is still on a uptrend. I need to repeat that. It is still on uptrend for Dow Jones, for the S&P 500. Can you see? It is all still above the cloud, above the weekly cloud. It is still on a downtrend. It is just that the market is starting to have a correction for the past a few days. And I'll share with you what are the things that are doing a kind of correction right now. And I want to share with you this thing is called the market breadth, right? Market breadth, I also mentioned in my YouTube video, I think 2 days ago only. So basically, this market breadth is to check the health of the whole market. Okay, so let me go into this index indicator. I'll post the link in the comment. Index indicator. Basically, because the S&P 500 are all those big cap stocks, and for example, like Microsoft, Apple, they carry a lot of weight on the index. Okay, so what do I mean by that? So let me go through this thing called the slip charts over here. I'll post the link in the comments. Also, you should be able to see it. Let me go to this S&P. Then it's the weight analysis. Weight analysis. All right. So can you see the graph over here? Although S&P 500, there are 500 companies. They are more actually. They are about 505 company, right? Because they are like, for example, they are Class A and Class B share. For example, the Google. Class A, Class B, so they are the same company, but so there will be more company, but just treat it as they are 500 companies. Okay, so can you see this weightage over here, the percentage of total S&P weight versus the number of companies? This is the 50 over here, right? 50 companies in the S&P index already represent 50% of the whole weightage of S&P 500. Really. So which means, like, for example, the Apple, the Microsoft, have a very strong rally. It is going to move the whole market up. But whereas the smaller company, right, not as big as those, like for example, the top 300, the 400, 500, right, they might be coming down. But you might not be aware of what's happening. So because only a few tech companies are going up, but the rest are coming down. So I want to see what is the overall health of the whole 500 companies. So I use this site called the index indicator over here. Let me try to zoom in over here. Okay, so I will choose the benchmark is the S&P 500, and I want to use the number of S&P 500 stocks above the 50 days moving average. And I think I mentioned before, 50 days, to a lot of investors and traders, this is like a short to mid-term kind of trend. Okay, so price above the 50 days MA, they deem it as an uptrend. Price below the 50-day MA, they treat it as a downtrend. So of course, price above the 50 days MA, it is more like bullish. Price below 50 days MA, it is more like bearish. So let me try to chart it. All right, so chart it. All right. So when I did the video, I think yesterday or 2 days ago, I forget. So the number of stocks above the 50 days moving average was about 55, I think 54%, I think so, 54%. But right now, I'm not sure whether you guys can see, can be a little bit small. So I'm trying to circle for you. Right now is 43.96. So 44% of the S&P 500 stocks are above the 50 days moving average. Okay, only 44%, which means that almost more than half of the companies are below their 50 days moving average already. So, as I mentioned over here, all right, so when you can treat this market breadth indicator, this right, as a kind of overbought, oversold. The black lines over here is the S&P 500, and the green line here is the the movement of the percentage of stocks above the 50 days moving average. Okay, so I just do a quick recap again. When market is at a high, market is at a high, market is at a high, price tend to do a correction, right? And then a correction, not really here, somewhere around here, okay, and then a correction over here, over here, then somewhere around here, there's a small deep correction over here. All right, and the reverse is also the same. At the bottom, price tend to rebound at the bottom, market tend to rebound at the bottom, market tend to rebound at the bottom over here, market tend to rebound. So what I want you to take note is that as the market continue to climb higher and higher at the all-time high recently, the market breadth, it is telling us that it is coming down a lot. So this is what the health the market is telling us. So more than 50% of the stock is below the 50 days moving average. So this is what we call a divergence. D-I-V-E-R-G-E-N-C-E. Oops, what did I do? Okay. Okay, you get the idea, right? So which means that while the market is heading higher, right, the breadth is getting lower. All right, so the number of stocks that is bearish is getting more and more. So this, as I say to you, this can be telling you that internally the market, it is not that strong. Okay, it is not that strong. It tells you that if you have any profitable position right now, it is maybe good to take some profit. That could be. I'm not saying there will be. There could be more downside to come. I am not sure on this. I cannot tell you what the market is going to do. If I can, I'm already a god already. Okay. All right. SK is asking what site is this? This is index indicator. I'll post the link in the comment. You just join me. All right. I'll post the link in the comments again. So let me try to see market breadth. Yes. All right. So this is actually what the market is telling me right now. S&P 500. Let me see chart again. Hold on. All right. Okay, got it. So this is right. So the market breadth is telling this is not that healthy. And then what I want to share with you is the all right. I also mentioned that, right? Some of the sectors I'll go through specifically the finance sector, the health sector, and the technology. So let's go through the finance sector. So if you followed my Facebook Live, I think the last one or the previous one, okay, or the previous one, I mentioned that the finance sector, it is not doing, could be turning down. So let's go to this XLF, the financial sector over here. All right, so I think I mentioned somewhere around here that the finance sector could be heading down. So yep, it is coming down. And from what I observe is that for a broad market correction to take place, so for example, all the stock that's coming down, the finance, the banks, need to come down, okay, or else generally there won't be a broad market sell-off. So I repeat, for a market to have a broad market correction, everything is coming down, the finance sector must take part. In the previous one, the finance sector is not really, doing a correction. Can you see from over here, right? The finance sector is quite strong, ever since the year 2021. And the reason why I say it is coming down, it is because I use this thing called the comparative ratio. I'm using the XLF, right, compared against the S&P 500. SPY. So I'm using ETF to ETF, apple to apple comparison. Right, so I need to remove all the lines first. Okay, so naked chart, right, easier for you to see. So for the comparison wise, ratio wise, I tend to use the weekly time frame. All right. So at first glance can be quite confusing if you're new to this ratio thingy, but basically it's just to compare whether a sector is outperforming another index, a stock, or another sector as well. It can be sector versus sector, stock versus stocks and such. Right, basically, just a very quick recap. If price is coming down over here, right, the ratio, which means that the finance sector is underperforming the S&P 500. If going up, it is outperforming the S&P 500. All right, so if it is ranging, it is almost the same. All right, going higher, outperforming the S&P 500. Okay, you get it, huh? So you can use basically the standard classical TA, right, the support and resistance to draw the lines, right? So you can see over here, right? This the high over here can draw let me see, alternate. It's line, horizontal rate. Okay. Okay. How come it's not here, right? Delete. Okay, so I already pre-drawn the line already previously. It's just showing up. Okay, so I remove this. I remove this. What I want you to focus is this. Okay, can you see that this is a prior kind of a support area. So this is kind of a cluster of support area over here. Previous support turned resistance now. So if you draw a line over here, you push back down somewhere around here, like this region over here. Okay, so you can see price actually, reverse back up again and then hit this resistance over here. This resistance. That's why I say there's a possibility that the finance sector could turn down, and indeed, price actually really come down. Even though I don't wish it to happen. Okay, the price really come down as the finance sector. So moving forward, where could be the support over here, right? When the price hit somewhere around here. Right, so this was the prior low over here, kind of a low over here, and then this is the prior low over here. Okay, so from what I see, of course, the very near term support it is somewhere around here, we'll see how it goes. But generally, I think for the next 1 or 2 weeks, there could be more downside on the financial sector, basically like the banks. So like for example, the banks recently, like BAC, Bank of America. All these are coming down quite strongly, quite fierce. It's coming down, etc. Like Citigroup, it is coming down. All right, Citigroup is down quite a lot also. From the high to the low, it is down about 15% really. So the bank is quite weak. It's quite weak. Okay, so can you guys understand so far in what I'm trying to share with you guys? If you can right now, please type a yes in the comments. Right, so I'll take a break. And we have about 220 people in the room right now. Again, just a kind of a quick promo over here. If you haven't given me a like or share, please give me a like, or at least just a like, okay? Liking is free, doesn't cost you money. So, give me a like, and to also tell Facebook that you want to see more of my Facebook Live on your Facebook feed. Because if you don't like, or if you don't engage with me, basically you're telling Facebook that you don't like me, you don't want to see more of me in the future. So Facebook will show you less and less of my feed. Okay, so give me a like and share. Liking is free. Okay, so I think I'm doing I'm quite okay now. Okay, doing some good value to you, giving you some good value, right? All right, so again, all right, so let me go through again the health, right? The health. I was quite bullish on the health, but of course, if the market is trying to do a sell-off, broad market sell-off, then it is will not be spared also lah. Okay, everything will come down, but relatively, can you see that the XLV, it is still quite strong. It is still holding well, even though like the finance sector is coming down, it is still holding pretty well. Okay, it's down 0.88%. Today, it is still holding pretty well. And again, just a quick recap, why I want to share with you this is the ratio. Why I think XLV, the health, it is doing well. It is because of the ratio between the XLV versus the S&P 500 over here. All right, so I draw a very long-term trend line over here. Can you see a long-term trend line over here? You guys should be able to see. So, price actually hit the low over here, the low over here, the low over here. So I'm taking a bet that, the health sector is going to go higher. All right. Even if it's not going to go higher, I believe it is going to be stronger than the other sector. Like, for example, the finance sector, the financial sector. Okay. So this is a very quick recap also. And the technology, the one I'm talking about is the tech also, the XLK over here, XLK. I didn't really draw a kind of thing over here. Let's try to see. All right, so the XLK overall, it is still quite strong. It is quite strong. All right, so let me try to go to the ratio over here, XLK versus the S&P 500. Okay, so I want to add in my cloud. Okay, so at the point in time over here in kind of February, this is like where the tech stock has a sell-off over here, and the value stocks, or those consumer cyclical, the consumer defensive, all the stocks began to head higher. But right now, it seems that, it is kind of supported by the cloud and is heading higher, which means that, that is the reason why, all the tech stock is heading higher, right? So you can use that to compare. It can give you kind of a good sense also. So yeah, so the tech stock is rotating back into the tech stocks once again. All right, so this can give you some kind of perspective, and of course, this was the trend line that I drawn. Again, this was a very long-term trend line over here. It dates back to 1999 over here. This was the swing low over here, and then back up again over here. And so, if price, the tech stock continue to hit higher and to move back into this area over here, or this trend over here, I'll be more careful already, right? Do you get what I'm trying to say? I'll be more careful already. All right, so let's go back to the things over here. Let's go to some of the broad commodities also. So of course, if you have been watching the news recently, they say that inflation is a scare, that kind, the consumer price index is up 5%, or it's the highest so far recently. So this caused quite a scare, and all the commodities are heading higher. Okay, so let me take a look at the broad commodity. So basically, there are two things that I look at. Can be this CRB index, all right, CRB index on the trading view. Let me try to add in my indicators over here. You can see for the commodities has been up for quite a while already, since 2020 June, right? It is 1 year ago. 1 year ago, 1年多前, 1 year ago, the commodity price has started to rally since price broke above the cloud and began on a uptrend move. And it is only recently for the past, like April like that, then the market news, the mainstream media talk about, all the commodities are heading higher and higher and such. But if you look at the commodity index, it's already going higher already. And can you see right now, price for the historically, price tend to react at the CPR over here, CPR rebounded at the CPR, all right, tested the CPR around here, okay. Last month didn't test, so right now we are back again at the CPR central pivot range level already. Can you guys see or not? Right, this green dotted line at the pivot point over here, and yesterday was kind of a flush, and today it is rebounding. So I will assume, right, price could continue to go higher until I am proven wrong. Okay, so don't try to predict what the market is going to do. All right, when it's rebounding at the central pivot range, I try to assume that the uptrend is going to continue. It's going to continue unless it is proven otherwise that it is heading down. Okay, so I don't try to predict. So right now I am still overall quite bullish in commodities. So watch out for the next few days. All right, see whether it can get past the swing high again. And of course, the R1 level is going to act as a resistance level over here, right? This is the Thomson Reuters core commodities index, also known as the CRB index. All right, and of course, I think some of you will be interested in the gold, silver, and copper. All right, gold, it is also interesting. Okay, there was quite a sell-off for the gold futures. All right, gold futures. I don't know why the trading view is not showing me the extended pivot range point. So I will use right now at this moment in time. I'll use the CFD price as a gauge over here, right? So right now price is actually touching near the cloud area of support already. When I first thought, price actually broke above the cloud over here, I was long here. I'm not actually on the gold minus. Okay, I can show you that later. But it went up, ping pong for a while, and then it came back down. So gold right now, even though it is kind of pretty bearish, but it is still above the cloud. It is still above the cloud. So I will deem it as an uptrend. Okay. What I want to share with you is not on this. More importantly, is I want to share with you the volume profile. Where was the highest volume transacted at what price? Okay. So on a weekly basis, gold is hitting at the weekly cloud support already. So these few weeks, right, 1 or 2 weeks could be quite crucial. Let's zoom back down to the daily time frame. I'll remove all the other things over here. Okay. I'll remove the line over here. Okay. So let's take the volume profile. Basically, I repeat, volume profile for those who are new here. I want to see at what price was there the highest volume at. Okay, at what price is there the highest volume? So right now, you can see the volume at the x-axis. It doesn't tell you what price was there the highest volume. Okay, so I'm going to use this thing called the volume profile over here. Right, I want to take from the swing low to the swing high over here. Okay, can you see over here or not? If you can see the line over here, the blue line, please type please type yes in the comment. So this blue line over here is also known as the POC, the point of control, where there is the huge volume, the highest volume transacted at that price. So at the price, it is at 1780 based on the futures price. Right? So even if you don't look at the volume profile, you should roughly know this consolidation phase over here. Normally, there's a lot of churning. Over here. So you should know that that is the volume churning. So can you see price, hit this volume over here, POC, and then kind of okay, kind of stuck here now. See, so it is hovering around here. Right. So, but today price movement is looking a bit bearish. There was a tail over here, or a candle, a wick over here. So meaning price is rejecting the high over here. It's rejecting this 1780, 1780, 1780. Okay. I'm guessing if price continue to fall, all right, the next support area could be this somewhere around the 1740 over here. 1740. Okay. The reason why is because there is also a high volume node over here. Okay, what I call the high volume node. Normally, those area where there's a high volume, the area right tends to also act as a support area also. So I add in my default things over here. Okay, so also somewhere near the cloud over here. Okay, so this is like the last line of defense on the daily time frame. Do you guys get what I mean? So this is gold, but no, don't need to be too overly bearish. No, it is still on a uptrend, but just that the recent bull run, okay, the recent rally can be a bit steep. Okay, so it's common to have price to have some pullback also. Okay, let's go to silver. Silver also over here. I think some of you are into silver. Also, basically the same price movement as the gold. Basically, sell off yesterday and then today there's a long shadow over here, the candle. So not looking very good also. And even for silver, can you see there's the high volume node over here? I'm not sure you can see it. Okay, this somewhere around here. Okay, so this is the high volume node over here. So right now today it is acting as a support over here. All right, at about $26 for silver. Okay, but it seems that right now price is rejecting this $26. So we'll see how it goes. All right. Right now I have no position in the gold and silver. The previous one I mentioned I was in GDX. Okay, the gold miners, which I had a pretty good run over here. I entered somewhere around this area over here. TP, take profit around here. I tried to enter again somewhere around here. I thought this was quite constructive, ready to hit, ready to go for another leg, but it didn't. Okay, Alex is always wrong, as I say. Okay, I didn't. So it didn't. So price actually stopped me out, and I just got out. So on hindsight, I got it out at the right time. So in fact, price actually hit down lower. All right. So this is just to share in case you don't know over here. What I want to share interestingly is also the copper. All right, copper over here is HG. HG, copper. All right, I know some of you are in these stocks called FCX, Freeport McMoran. This is the copper miner stock, or some of you could be in copper miners, COPX. This is the ETF. All right, so for those who are with me already, so this is the copper futures price. So right now is copper on an uptrend or on a downtrend now? Can you please type uptrend or downtrend? If you know the answer, for those who are with me for a long time, you should know the answer already. Uptrend or downtrend? No answers from you guys? Keith say down, Willing say down. Yes, okay, it is down. Xiang Run also say down. So it is down based on the daily time frame. Okay, I'm not saying that it's going to crash. I'm saying based on the daily time frame base, it's going to be a downtrend. But if you look at the weekly time frame perspective, the longer time frame perspective, okay, copper had a very spectacular rally really. Okay, give it some slack. Okay, it is not going to chunk higher up. Also, on a weekly time frame, this is a normal pullback now. This is a normal pullback. So don't be so frightened. Okay. Of course, if you are trading swing trade, you should already get out already. It is not looking good. Position trader, you should also get out also. I believe so. This is my own view. I believe there could be at least a few more weeks, before price would hit this R1 level or the level 3 Cameron level. So let's see the yearly pivot. It's quite some, okay, not to see. Actually, it's quite far away. the yearly pivot is here, okay. So I don't think price, go until like this, because overall, I think the commodities market, it is still on a uptrend. So I don't think you'll go to yearly pivot, but watch out for this area over here, right? This somewhere around here, okay, which could take about another 1 to 3 weeks to form out. So right now, based on the daily time frame, it is on a downtrend. So if you take a look at the COPX, which is the copper miner index, it is down. Okay, it is down. So previously I mentioned in my Facebook Live, I actually try to do a long position. By the way, for those who are new to MarketWise Asia, my default position is swing trade, which I will hold for a few days to at most 1 to 2 weeks, that kind. So I'm not the kind that hold many months to many years, that kind. So swing trade hold for a few days. All right. So I entered somewhere around here, okay, and then I take profit somewhere around here when price was resisted at the CPR. Okay, I mentioned, right, when it is at the CPR, I will always assume that price is going to rebound higher and to resume the uptrend until it is proven wrong to me. So at this point in time, price was at the CPR and it kind of resisted over here. So I took my profit over here. And again, in hindsight, this was a good move. Price continued to head down. Okay. Shumu is asking, warning. Warning it is because price it is on a downtrend already, right? So you shouldn't be entering price on a downtrend if you're going to buy it, all right? So Shufian Junhairi, you are asking me where is the support? As I mentioned already on the weekly time frame, all right? This is the okay, this is the weekly time frame. Somewhere around here, right? The H3 Camarilla level and the R1, that is about, I'll give you a range of about $3.90 to $4, right? About $3.90 to $4. That could be the near-term support over here, right? Please don't quote me. I'm not saying that at this point in time, when price hit $3.90 or $4, it is going to head higher. It's going to head higher. Okay, so please don't quote me. It could. So you need to watch the price action at that point in time. Minko is asking, do you do shorting? So I try not to short in an overall uptrend because last time I tried before, when the market it is still on uptrend, you try to short, very gangko one, very difficult one. So you always very fast, price could come down a little bit, price will come down a little bit like that. Sorry, price will come down like this, suddenly you turn up like this, then you get stopped already if you try to do shorting. So if you want to do shorting, nowadays I try not to do individual stock short. I will try to do an ETF short. That I think that is better. All right, so this is my personal view. Okay, so it's very common if you try to do shorting on individual stocks. The market tends to go up higher. And let me go through this. Dollar index. Okay, this is something I need to go through. Dollar index. I'm for about 46 minutes already. I'm getting running out of time. Okay, so the dollar index, DXY, dollar index. And of course, because that the Fed, say want to raise hikes, right, in 2023, which is I think is still quite far away, and because raising the interest rate is bullish for the US dollar. When there's interest rate high, it is going to be bullish for the dollar because you can get higher interest, right? So so for the US dollar index, right? Let me try to remove this. Yeah, remove all the everything line first. Good. Okay. So this was the so-called the projection over here, the trend over here. Initially, all right, I thought it is going to continue to head higher. Continue to head lower already. Sorry about that. Continue to head lower already. But subsequently, market always like to give you surprises and continue to head back up again. All right. If you go to the weekly time frame, it can give you a clearer perspective. Price broke through the trend over here. Supposedly, it is going to head down, but it is not going down. Instead, it is going to head higher. So if you anticipate that something is going to go down, I repeat, if you anticipate something, it is going to go down, but it is not doing what you're going to anticipate, very likely the reverse will happen. That is going to head higher. And this is exactly what is happening to the dollar index. Watching the dollar index, it is not going down, but it's, just bam, all the way up. So there's a high chance that, for the next 1 to 2 weeks, price could head higher again and hit this trend line over here. And then, we'll see how price react at the trend line. And of course, if the US dollar is going higher, right, then it could put pressure on the commodities, okay? So the commodities could be coming down, all right? Of course, this is by right the textbook example, the textbook knowledge that USD is appreciate, then all the other things, commodities, the price was based on USD is going to come down. Of course, this textbook answer, okay? But as I mentioned, what I see on the commodities index over here, I repeat, it is actually at a support area over here at the central pivot range over here. So I will just treat, okay, the commodities index as individual, the US index as individual and such. Okay, so I try not to have too much of a kind of a correlation, that kind of trying to link everything together. So I'm not so smart. So I try to just look each chart as independently. All right. So do you get what I mean? So the bonds, okay, the bonds over here, the TLT, which I mentioned also. I'm not sure how many you actually remember. The market is always like that. Okay, the trade that I didn't enter, right, it shot up. The trade that I enter, either it just rally a bit or it didn't rally. Okay, how many of you have this experience? Type me in the comments. Okay, so I think last 1 or 2 weeks, right, I mentioned somewhere around here that watch out for the TLT, which is the treasury bonds. This is the iShares 20+ year treasury bonds. It is above the central pivot range at that point in time, so which tells me that the price, it is kind of the downtrend is weakening and could be heading higher. All right, could be heading higher. It is quite expected to me. It's like price has such a huge sell-off, and then price kind of consolidating, all right, and then price is heading higher again. So this is the trade that I mentioned. I wanted to enter, but I didn't enter because at that point in time I already had a few positions already, so I didn't want to enter. And the moment I didn't enter, price just boom all the way up. You see, Alex the sway like that. You see, okay. Nevertheless, jokes aside, but what I'm trying to say that it is kind of contradicting to what the Fed it is saying right now, where if the interest rate is going to go higher, all right, which means the bond price it is going to come down. It is going to come down, right? It is going to come down, right? Because bond price and the yield is inversely, right? It's inversely proportionate. So which means that price goes up, the yields go down. The yields goes down, the price goes up. But the price is actually going up. You see, the bond price is actually going up, which means that the 30 years, this is the ZB 30 years bond price, 30 years treasury bonds, it is heading higher, which means the market is actually anticipating that the yield it is going down. So how do we reconcile this again? Okay, the Fed already announced that they are going to raise the hike eventually in 2023, which means that the market is always a discount mechanism. They always forecast or project 6 to 9 months ahead, right? 6 to 9 months ahead and such. So bond price it is going higher. All right. So I'm not an expert on this, but to me it's like the market it is not actually the market don't believe that the Fed is going to increase the interest rate anytime soon. This is what my interpretation is. All right. And Kai is saying that it is about the inflation expectation, all right, the UST minus the tips, okay? So I'm not an expert on this, all right? Maybe I should consult Kai on this. I think I saw you mention this on Jay's swing trading group, right? So yeah, okay, so interesting. So I'll go research on this. But generally, my interpretation is, you know, the market, it is the market participant is not anticipating that the Fed is going to really increase the interest rate. Okay, this is what I'm trying. This is what my interpretation is. And okay, I'm going to share something new today. Right? This is the SPHB SPLV. Right? This is an ETF. Okay, so let me go through this. SPHB. ETF.com. SPHB. Essentially, this is the high beta ETF. High beta. BETA. All right. So for those who don't know what is beta, beta is actually, you know, kind of, you know, whenever a stock that kind of outperform the market S&P 500, which is the benchmark, right? It is considered a high beta stock. Okay, so for example, over here, if the okay, oops. This is the high beta. I think some of you should know lah, but I'm trying to explain. So if the S&P, okay, goes up 1%, but this stock A, right, goes up 2%, okay, this is considered a high beta stock because it tends to outperform the benchmark, which is S&P 500. So whenever so basically, it is going to be correlated with the market, the S&P 500, but it always outperform the SPX, the S&P 500. So for example, move 1%, you move 2%. S&P move 2%, you know, you move, for example, move 3%, that kind. So this is a high beta stock. Conversely, if it's a low beta stock, meaning that it's a low volatility stock. If the S&P move up 1%, maybe this stock B maybe tends to move only maybe 0.5% only. So this is between the high beta and the low beta. So I hope you guys get it. So this is the Invesco S&P 500 high beta stocks over here. I try to zoom in over here. Okay, can you guys see? All right. So the SPHB is kind of an extreme market bull. All right. So basically, it's trying to rank the highest S&P beta stock. Basically, it's like growth stock, that kind. Okay. Or okay, never mind. I'll try to explain this. Okay. Okay. So let me try to see what are the stocks that's being involved over here in the holdings of this. All right. So can you guys see over here the top 10 holdings are like, you know, Energy, Norwegian Cruise Line, you know, Carnival Corporation, Royal Caribbean Cruise, United Airlines, all these energy, Marathon Oil, energies, Boeing. So wait, okay. Oh, I want you to notice is this. The top 10 sectors. What are those? Financial, consumer cyclical, okay, or consumer discretionary, whatever you call it. Financial, consumer discretionary, energy, industrial. Okay, you guys just follow this. These are the high beta stocks. Now I want to go to the SPLV. This is the Invesco S&P low volatility ETF. Basically, it is a low beta stocks. Again, you go to the holdings of this ETF over here. Top 10 holding constitute about 12%. So they're all these consumer defensive stocks. Colgate, P&G, Verizon, Pepsi, J&J, Costco, Hershey, McDonald, all these are the consumer defensive stock. Again, not the most important. What I want you to take note is this. The top 10 sector, the top few what are these? Consumer non-discretionary, which is the consumer defensive. Healthcare. So you know why I am bullish on healthcare? Okay, industrial. So basically these two, consumer, defensive, and healthcare. All right. So now comes the important part. I mentioned that I do ratio, right? So you go to the chart over here, SP HB versus SPLV. Go to a naked chart over here, weekly. All right, so can you see for the past like 2020, after the COVID sell-off, all the high beta stocks, the tech stock and such, right, are all heading higher. Okay, but right now, the ratio right now we are hitting at a resistance once again. So price hit this high over here, came back down, and then trying to retest the high, but cannot go higher. And there's a possibility that price could go down lower. If SPHB versus SPLV, it is going lower, the ratio is going lower, which means, okay, the SPHB, the high beta stocks, it is going to come down, and the low volatility stock is going to go higher relatively. So which means the high beta stocks is much weaker than the low volatility stocks. All right, and back to the ETF again. So if you want, the market right now is selling off, right? And this high beta versus low volatility is like it's coming down. So essentially, it is trying to tell you that you want to avoid these stocks that is listed all over here, to avoid all these stocks that's listed here. Essentially to keep things simple, right? As I mentioned, right, you want to avoid the financials, you want to avoid the consumer cyclical for now, and you want to, if you really want to buy, all right, you want to focus on the stronger one, which is the SPLV, which is the health and the consumer defensive stocks. To me, it is quite logical, okay? Textbook, you already know that, when markets sell off, you have to go into the more defensive one, like the healthcare and the consumer defensive, okay? So this is quite logical. I just want to give you another perspective, okay? How do you see it? Okay, so this is the sector, consumer and healthcare. So you guys knows what I'm trying to say or not? Okay, so of course, right now the healthcare and the consumer defensive is relatively stronger than the consumer cyclical and the financial. Okay, so is this something new to you? Right, this SPLV and SPHB. If this is new to you, please type yes in the comments. Okay, well, I take a break first. I'm very thirsty now. Speaking for 1 hour already. Okay, so let's go to my watch list. So previously I mentioned, there are certain things. I think a few weeks back, my watch list, I mentioned that these are things leisure and travel that I'm watching cannabis, biotech, hydrogen, and such lah. Okay, I'm not all correct. Like MJ, the cannabis I entered, happened to be not what I expected. Is came down. I was out. I was top out also. It's okay. So, but nevertheless, PJ, IBB, lithium, solar, all these are continue to head higher. My current watch list, even though assuming that everything else is constant, the market, it is normal. Okay, of course, right now the market is a bit sell off lah. So, but watch out for this industry, right? When the market gets better, or the best if the market is coming down, but this industry continue to go higher. Okay, this is the best I'm watching. Clean energy like ICLN. Okay, I really know all these ETF by heart. Really, clean energy ETF I'm watching. I am also watching solar. It's the same over here, no change. Solar is 10. And I'm also watching cloud computing. Okay, I mentioned that in my previous Facebook Live also. The ETF is CLOU, cloud. I'm also watching cyber security. Okay, cyber security. So you can see it is pretty tech focused. In a way, it's a subset of tech, cloud computing, cyber security. Okay, so cyber security, interesting. Okay, guess what is the ticker? HACK. Hack. And then I'm going to share something that is I'm also quite I also discovered this ETF today only. Pet care. Okay. By the way, do you know there's a pet care ETF or not? I don't think you know. Actually, I don't know no, until I discovered it today. And it is doing pretty well. And it has a very interesting ticker name. Can you guess what it is or not? Okay. It's not dog, okay? It is PAWZ, pause, pause. Interesting ticker name, pause, okay? So before I go into like the clean energy, solar, cloud, and cyber security, okay, let's go to the pet care first. Okay? Let's go to pet care first. Are you guys learning again something new? Pet care? Are you guys aware of this pet care ETF or not? Pet care. Okay. Pet care or not this one? ETF. Screener.com. Not this, sorry. ETF screen. ETFscreen.com. Yes. Pawns new, not pawn, not PORN, it's pause. Sorry about that. Yeah, performance wise, yes. So I think I saw it in the first. Okay, let me try to go to that. 500. Okay, I set it to short funds. No. Leverage fund. No. Things no. Okay. 3 months. Let me try to see. Okay. I try to zoom. The usual suspect, soybean, corn, the commodities, carbon, agriculture, all these are inside. All these are inside already. Okay, so months. Let me see what 3 months. 3 months. Okay. All right. You see this one or not? Pause. I don't know why I can't draw this. I hope you guys can see, not too small for you. I don't know why I cannot. Never mind. So can see, I'm not sure you can see or not. Can see, okay? Pause. Pro share pet care. It is up about 11.71%. Okay, not the highest so far, but it is something new to me. It is interesting to me. Okay, so let's take a look at pause. PAWZ. Okay, so this is the naked chart. Okay, naked chart to you guys. Okay, so to you guys, this is the uptrend or downtrend. All right. In the cloud, definitely on a uptrend. Can you see over here? This cloud is acting as a support at this level over here, and then price rebounded. Okay, so I'll sidetrack a bit. So let me add back into my standard indicators over here. Quite good, right? This how come I'm not aware of this ETF previously? Okay, it went up quite a bit, and right now price is still above the CPR over here. Okay, can you see price actually tested the CPR over here and then rebounded again? Okay, rebounded again. Right now price is at a high level. Okay, I'm not asking you to go and chase now, go and buy now. Of course, price could go like that. It could, but this is not my style. So I prefer to wait for price to come down a little bit more, or if there's some trigger that I want to see, for example, the wash and rinse that I always mention, then I might enter. So right now, not yet. And I also like the fact that, you know, price actually have kind of a consolidation. Some might see as a symmetrical triangle or whatever you call it, but I like to see, you know, price actually the sell-off is getting lesser and lesser. You know, this is a strong sell-off, very strong sell-off. You know, after that, you know, sell-off again, right? And then the sell-off is getting lesser and lesser, which means that, you know, the supply is getting lesser. So not much people are selling already. So eventually, you know, price broke out of this trend line over here and then head up higher. All right. So pet care, it is quite interesting. So let me go to this ETF.com. Okay, so for the show yen, right? It say volume low. To me, okay, not it is low, but you can see that the overall the price movement, it is still quite fluid. It is still quite fluid. Okay, and for ETF, right, there's always a market maker there, you know, to provide liquidity provide liquidity. So to me, there is not much issue to me. Okay, anyway, I'm not a whale, I'm not an institution. Okay, I only entering I don't know, at most to me it's 100 shares. That's like 7,009, that kind. Only how much share can I, you know, enter? Okay, so I'm not that big kind of trader or investor. So to me, getting in and out doesn't matter to me. What I want to see is that, you know, there is a fluid price movement, right? It is respecting the technicals, which is, you know, respecting the trend line, respecting the CPR, respecting the cloud and such. Okay, so this is what I want to see. That's the most important thing. And Shok Yen, thank you for commenting. I see you on the YouTube. All right, you're on YouTube. Good to see you. And yes, okay. So pause. Okay. So pet care ETF over here, right? A tier weighted index of global equities related to pet ownership. Blah blah blah. Okay, you can go explore and some of the things that, you know, some of the stock that it is holding. I'm not actually very familiar. Okay. IDEX, Zotis, Fresh Pack. I think this Detra Pharmaceutical is not. It is not US listed. Chewy, Conversus. Okay. All right. So Nestle, it is in because it is dealing with pet food, I suppose so. So it really say that it has to deal with related to pets. That is, you know, for example, you know, pet food manufacturing, pet food supply, veterinary, pharmaceutical, diagnostic, right, distributor as such, and service retail. Okay, so this is constitute everything. So interesting over here. And clean energy. All right, clean energy is something it's not here. Something is inside today. So clean energy that I am looking at right now, it is ICLN over here. ICLN over here. Can you see over here, you know, price, even though price is still below the cloud, all right, but it is hovering now at the CPR over here, which means that, you know, price could potentially turn and back to a uptrend again, and it is pretty near to the cloud level breakout already. So I'm watching this, and if you want to look at the longer time frame perspective, okay, right now the clean energy, it is at the yearly CPR. All right, so, you know, this was a false breakout over here. Can you see? Try break lower, cannot go, and the reverse happened. And right now it is, you know, pausing for a while. So if the market, it is not so bearish and the market resume its uptrend, I think you can take a look at the global clean energy, the ICLN, and I think it has potential. Please don't quote me. I'm just thinking that it could go up, but it might not. So please do your own due diligence. Okay, I'm always wrong. Please don't copy me. And then what else? Cybersecurity. Cybersecurity is hack. Okay, hack over here. HACK, hack. All right, cybersecurity is strong. So can you see over here? All right. there's a kind of a base already, a consolidation and price broke out of this place, this base, and right now price is above the cloud and above the CPR over here. Cybersecurity is stronger than the market and also the XLK. So let's compare the hack over the XLK, the tag. Let's go through the naked chart over here. All right, I'll just add in the cloud. All right, to give you a perspective. I repeat, so I'm using the HACK, compare the ratio against the XLK, the tech sector. You'll see for quite some time, the cybersecurity industry has been underperforming the tech sector, or the tech sector. Right now, price tested the low, right? You can say it's a double bottom, right? This low over here cannot go lower, and price is trying to break above the cloud. So if you want to invest in the tech sector, right, watch out for cyber security. I think cyber security could have quite some potential instead of looking at other tech industry, okay, like software and such, right? You could look at the cyber security. Also the same for the cloud computing versus the XLK also, cloud, CLU. All right, which I mentioned previously, I was quite bullish because price was at this trend line over here and starting to rebound. So right now we are at a prior trend line resistance over here already. So do watch out for it. All right, so if we zoom into the daily time frame, it is still pretty okay. We'll see how it goes. But generally, I am quite bullish on the clean energy, the cybersecurity, and the cloud. And of course, solar, I mentioned a few times already, so I don't want to go through solar already. You can take a look under its 10. And to me, pet care is quite interesting now. So obviously, it's not just pet that's quite interesting that I want to go in. I think the price action looks pretty good also. So I'm waiting for the opportunity to enter also. All right. So I hope you guys learned something new, or you are getting value out from this Facebook Live. If you think I am providing good value, right, please type a value in the comment, type value so that I know. And also after 1 hour, 15 minutes, right, please give me a like and share. If you stay still with me, right, if you stay until now with me, please give me a like or share. Okay, so please tell Facebook that you want to see more of me in the future, or else Facebook will show you lesser and lesser of my Facebook feed on your feed. Okay, so please give me a like, share, or comment. So liking is free. Please freely give me your likes. And I also want to give one last shout out to this Market Insights Virtual Summit. Okay, virtual Market Insights Virtual Summit that's coming on the 10th and July. In case you just joined me only, so we are doing this summit on the 10th, 11th. There's a few keynote speakers. Michael Covell, best-selling author of Trend Following, Boris Schlossberg, the forex expert, and Tom Basso, the original market wizard and a hedge fund manager also. So please do register for this event, proudly sponsored by IG. There'll be lots of content, strategies, market outlook, and you will get a lot of different views. I'm sure you will learn a lot of things from this summit as well. So do register for this. Just click on the register free, enter your name, your details, and you're good to go. I will post the link in the comments once more. All right. And of course, you should be able to see the link on the scrolling bar on your screen right now. All right, so let me see the comment. Oh, Stephen Chu is saying super value. Thank you so much. Okay, so right, okay, at least I know that I'm providing value to you guys. Let me see any question in the comments. Let me see first. Okay, James. Okay, should we also avoid energy stocks? This is quite a hard question to answer because I'm also in energy also. But generally, let's take a look at energy. Energy, okay, it's undergoing a pullback, guys. Undergoing a pullback, no doubt. Okay, cloud, not this default. Okay, right now, I'm still inside. Energy, I'm still inside. Okay, like for example, XLE, the energy, it is quite okay, even though there's a sell-off, but it is still quite okay. Haven't really closed below the CPR, the central pivot range, and overall the commodity market, the uptrend is still intact. So it really depends on you whether you're holding for a position trade or a swing trade. Of course, if you're holding a swing trade, do have a stop loss in place. If you stop it out, then you exit. Okay, position wise, it really depends on you. Below the cloud, below the CPR, then there could be a cause for concern. Okay, watch out for it. Like for example, my XOP. Okay, even though price is not strong, but it is not that weak also. Price is still above the CPR. So I'm still holding now. So until price really tells me that it is really weak, then I might consider to take profit already. Okay. So yeah, I hope I kind of give you an answer, because to me it's very hard to tell you whether can buy or cannot buy. There's no answer. But generally, I can have the trend. It is still intact. Uptrend, it is still intact right now for energy. All right. And Menko is asking, how often are these stocks in SPHB or SPLB updated? This is a good question. I think they'll rebalance quite often, but I'm not exactly sure of the dates. Okay, let me try SPHB. You can go and Google the issuer, all right, at Invesco and search it out. Okay, I don't have the time to do it right now. You can always go and search it out. Let me see. It didn't say, but I suppose should be quite often. All right, so good question. Maybe I can go and check it out. All right. You talk about, does short-term bonds always correlate to short-term bonds? What do you mean by that, Minko? Let me see. And once again, Kai, just want to share with you, just to tell you that thank you for your comments. Inflation expectation, USD minus tips. I don't exactly understand this. Okay, I'm not expert. I'm not expert in everything. So do share with me, right, your insights. Okay, I know you are a very experienced investor and trader yourself. All right. Let me see. I think it's asking, should we avoid tech stock due to the Nasdaq is double up? What do you mean by double up? Should we avoid tech stock? Should we avoid tech stock? Let's take a look at XLK again. XLK, okay, I think, how should I answer that? So to me, it's that right now, tech is still pretty strong. So just watch out for the individual stocks if you want to. So to me, it's that you can still hold it. If there's any, trigger price action that individual stocks that, say go, then just go ahead, okay? But to me, the tech, it is still strong. So there's nothing to tell me that, I need to sell my tech right now. Okay, of course, as I mentioned, tech, there are many different industries. I'm looking at the cybersecurity and the cloud. All right. Minko is asking, generally, yes, short term will correlated with the long term bonds, but there'll be time where there'll be the so-called yield curve inverse, but not always. But I think now it did the inverse really. So I think now it is still correlating. Okay, it is normally it is correlated. It is correlated. All right. Crypto, Marcus, you want to go about crypto? Crypto, nothing much to talk about crypto. So I can talk about crypto, but not my main focus. For example, crypto, I already mentioned. Okay, I go through my YouTube again. YouTube, my video. No change in my view on crypto, on Bitcoin and Ethereum. So you can, where is it? This one. All right. Will Ethereum be heading back to the 1730 low again? So Marcus, I will share this the YouTube link again to you. So I wrote it, I created this video on the 6th of June. So I mentioned that the Ethereum, I am still bearish simply because, you know, price is below the cloud, below the CPR. So it is a downtrend to me. So I'm looking at to test the low again. But of course, it might or it might not. But overall, I am still bullish. So after so many days, yeah lah, I mean, nothing much changed. It is still bearish. Okay, it is still bearish. And for Bitcoin as well, right, it is the same as well. It is still bearish. So can you see price tested the CPR again? Can you see price tested the CPR again and then come back down again? So it is still bearish. My view hasn't changed for the these two big boys, Bitcoin and Ethereum. All right. Cannabis. Okay, JFC is looking at cannabis. I can't talk about cannabis. This was the one I got stopped out. Okay, so sian. But never mind. Yeah. Right now I am not so keen on MJ, which is the cannabis stock, because initially I thought, you know, price above the CPR over here, I could be looking at a potential long, which I did, and I was stopped out. You know, price came down lower. Okay, so right now price is back again the CPR and below the cloud. So totally I will be touching the cannabis stock for now. I'll be staying at the sideline until price action tells me that it's time to rewatch again, which needs to be priced above the CPR. Okay, I hope I hope that answer your question. All right, any questions so far? So today I think it's a bit longer, 1 hour, about 1 hour 25 minutes already. So I think that's all for today. All right, one last call. Please give me a like or share if you enjoy my sharing for today. So just a quick recap again. I mentioned about the market breadth, talk about the finance sector. It is weak. This health, it is stronger. Technology also pretty strong. Commodity wise, gold, silver, it is still an uptrend. Copper, it's a downtrend based on the daily time frame. Dollar index, it is heading higher. I think could head higher for the next 1 or 2 weeks. So that could be euro dollar, so could be heading down. So basically, be prepared for a higher US dollar. And the bonds, it is the US bond price is heading higher. And I say that avoid the SPHB high beta versus the low volatility stocks. So the high beta ones, it is the low volatility is consumer defensive, right? Consumer defensive, and the high beta one is the financial. So maybe could avoid the financial for now. And the watch list I'm looking at, it is the clean energy, solar, cloud computing, cybersecurity, and the pet care. Pause. Okay. All right. So I think that's all for today. Thank you for staying with me until so late. It is about 1 a.m. in the morning already. So I wish you guys have a very good weekend ahead. And again, one last call, do register for the Market Insights Virtual Summit. Okay. It is free. All right. So I will see you guys again maybe next week. All right. So thank you so much for tuning in. Good night. 晚安。再见. See you again. Bye bye.